please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. Well, actually, the markets have negotiated the fiscal slippage rather well, you will have to say. Mid-caps continue with their incline up about 1/3%. But there could be another hiccup that could come from the market regulator, capital market regulator, Sebi this time. This afternoon, there is a meeting, an important board meeting, where among the others, the debt disclosure rule could be once again discussed and perhaps be made a norm. Sandeep Parekh, founder Finsec Law Advisors and a former Sebi ED, is joining us with his expectations. What's your sense? Good morning, Sandeep, first of all. Thank you for joining us. Your sense is that this rule will be reinstated, and if yes, any caveats, any dilutions?
No, I don't expect any dilution. I think again, this is all based on my hypothesis, but clearly the final rule had come out and they withdrew it. So I think it was almost certain that a new rule would come in its stead. I think the old rule, which is effective, I believe, 1st of October, was essentially, I think it had niggles around when it became effective. You know, if I were to send a legal bill to somebody and payable in 30 days, does it mean on the 31st day that person becomes a defaulter and has to declare it? I think those are the kind of finer issues which needed to be tackled, which is probably why both the the lending side and the borrowing side protested against that. So my guess is that they withdrew it to fine tune it to not catch all kinds of default and not one day of default. So you'll probably see some subtleties come in terms of the nuancing which will come in terms of when something needs to be disclosed. Okay. I mean, once the bullet is left Sebi's gun, it's certainly it's certain that will come back in another form.
So what could this nuancing be? Because there are a lot of demands that the banking industry had, and people believe that the Sebi will sort of concede to these demands. Are we looking at some allowances for technical defaults? Are we looking at anything else?
Yeah, so just before I answer your question, I think the big picture is this, that we've had so many, probably a decade or more of, what I call the Ometa code of silence between borrowers and lenders, in which both parties are extremely happy to hide this fact. And it at worst, it became really a lie to a credit rating agency, or it's a complete silence, which we've seen in many cases. Once news becomes bad, they stop communicating with the rating agency. So we've had essentially a contractual breach with the rating agency, but nothing more. Sebi is now kind of trying to raise it one notch up to making it a regulatory default into kind of a serious offense. So I think it's a good thing because it breaks this whole Ometa code between the borrower and lender. Okay. And to really answer your question, I think the nuancing will come around, yes, the nature of the default, the nature of the whether it's an operational credit, not all operational risk will be out, but also some kind of leeway in terms of maybe a 30-day period or a 15-day period before it's declared, but certainly not a 10-year delay.
Oh yeah, of course. Actually, one of the former RBI governors was saying that I mean, he told us in one of our discussions that maybe any restructuring of debt should definitely be disclosed to minority shareholders and to the exchange. That may be a disciplining tool. But Sandeep, are you expecting something on ownership of mutual funds? I believe that's also on the agenda.
No, so again, I don't have much information. I really don't want to comment on it because I don't think the fine print is out, and it'll be hard to comment on the fine print even before it's out. So, I mean, again, if it comes, let's discuss in the evening.
Sure, but even if there is something to do with, registration of FPIs, the entry norms for FPIs could be changed, etc. Do you think that is the need of the hour? Because there is a talk of rationalizing the fit and proper criteria, etc. And, perhaps that would even eventually shun the P-note route. Is there anything on that front that we can expect?
No, so I think exactly what I think you hit the nail on the head. Two things which are happening. One is I think they want to make the P-note route more and more unattractive. And at the same time, what has happened with the whole privatization process in terms with the DDP, which is a private entity, I think they've become the private entities have become more bureaucratic than the regulator. So we've heard a lot of complaints in terms of the whole KYC process. So I would expect some level of simplification easing because I don't think it was the intention of the regulator to make it more bureaucratic by privatizing that process. So I think we'll see some action on that front, hopefully.
Okay. We'll do one thing, Sandeep. We hope you will be free in the evening and we will touch base with you as and when we get these rules. The key rule for India Inc. would be what are the conditions under which they have to disclose a debt default. That I think will be the most important theme. But of course, there would be other announcements as well, and we look forward to that meeting. Later today, that is. Okay, with that, let's shift focus back to the equity markets. You'll have to say the negotiation is very good of the fiscal news.
It is quite good, and a lot of stocks are doing well. Just want to point out JP Infratech. I think that was Mr. Tulsian's pick, one of the 18 picks. That stock is up 18%, and JP Associates as well is up 7%. Of course, Zelcom is the top gainer, but Ashwini,
just a word on the JP Infra case. One of the investors said that they are happy about the JP Infra case after Relcom, where again the land going into an SPV and being allowed to repay. JP Infra is negotiating a similar deal, so there is a little confidence that will be allowed in the NCLT.
Exactly, and that has of course been Mr. Tulsian's pick as well for many months now in the NCLT's cases, so 21 on that stock. But Ashwini and Mitesh are back with us. Ashwini, so the market has negotiated the early blows well, in the green now. Your thoughts on how to approach the day from here on, and in terms of individual stocks, what would you trade?
Well, negotiated well is an overstatement.
Okay.
You are up hardly 11 points on the bank Nifty. So this
but you're not down.
Gujarat.
That's what I meant.
It'll take you 5 seconds to go down.
You expecting that?
See, what is the response to good news? 10 points?
But where is the good news?
While good news that, it wasn't as bad as expected, etc.
Fair enough. Okay.
That's not playing out. So while for the day it's going to be choppy and there are short positions on the bank Nifty, you'll see spikes higher and we are long on the bank Nifty. But overall the early morning action does not tell you that the market will move on from this. So Gujarat election, it was clear by the time it was 10 o'clock, the market was back 500 points. You need that sort of climatic action to say that this good news, etc. is expected. I think we'll be choppy and sideways, but if yesterday's low starts to get taken out, then there'll be more trouble ahead.
Okay.
So for the moment, Soba Developers is a buy with a stop of 625, target of 660. JP Associates is a buy with a stop of 20, target of 27. And JSW Steel is a buy with a stop of 268, target of 282.
Okay, Mitesh Thakkar and Rajat Bose are also with us. Mitesh, before I ask you about your own stock ideas, also wanted your thoughts on the metal space, because there are big stars today, Hindalco, Vedanta, Tata Steel. Anything here?
So the first thing I think which we covered was Hindustan Copper, of course not the frontline name, but yeah, I think the entire metal space is quite buzzing nicely, and one stock which really interests me right now is Tata Steel. I think getting past the earlier swing highs of 730 should see the stock possibly gain some momentum. So keep a stop below 720, and 755, 760 should be a target, most likely, if not today, then possibly by tomorrow. Okay.
Well, I just wanted to point out, incidentally, we are the worst performers today in the Asian screen. Most other indices, Kospi up 1%, Hang Seng up over 0.5%, 0.6, 0.7%, and so on and so forth, Straits in Taiwan and all other indices as well in the green. We have not done quite as well, but obviously we had that big macro news to react to. Ashwini, can you once again revise your contours on the Nifty? What is the trade now, and what will be the trade if it were to go towards that 10,470 mark?
See, the trade till say 12:30, 1 o'clock is to be long.
Okay.
I expect some more short covering to come in, but post 1:30, that is where the problem could come in. So be careful above 25,550 on Bank Nifty futures, and maybe closer to 10,525, 530 on the Nifty futures. So while you could have some more upside, but the upside is too mild and the momentum is too slow to expect that we will make a fresh high beyond 10,550.
Okay.
Okay, Rajat Bose is also with us. Rajat, what would be the stocks that top your list this morning?
Well, that stock has already moved up. I was looking at Bridging Corporation, but the kind of movement that it has already given, it is very difficult to give a buy call right now. Perhaps one of the best movers in today's session. That aside, I would bet on Kolte Patil. Kolte Patil, it has crossed 372, a key resistance level. So I would put a stop loss below that, and 385 and 390 are the two targets that I have. And apart from that, my old long side favorite, Maruti, it has gone through a 5-day correction. Today also is not showing much momentum, but towards the end, I suppose it will touch 97.50 to about 97.65, and resistance level, I would put a stop loss below 9625.
Okay, well, it's turning out to be a bit of a PSU day as well. Just pull out the intraday chart of a couple of these. Dredging Corp, also there's MMTC, so some of these stocks are looking quite interesting. In fact, Dredging Corp is the one where we have seen.
Yeah, that's what Rajat was talking about.
Exactly, 11% higher on that. I think clearly that disinvestment process. The stock that normally follows Dredging Corp is Shipping Corp. So that will be interesting to see if because dredging is seeing 11% run. There's a similar move that happens in Shipping Corp. That normally happens. But Ashwini, your thoughts on some of these PSU stocks and the way they're moving?
That just tells you budget is around the corner. So for next 1 month, education, PSU, health, etc. That should have a good time. Maybe even agri stocks, because otherwise, other than that, I don't think too many other sectors have great momentum on the upside.
Okay, Mitesh, I think we couldn't get through your stock ideas. So what are you picking for today?
Yeah. So I have one buy and one sell. Britannia is a sell with a stop at 47.40 for targets of 46.65. Try to sell it around 47.10.15. And Infi Beam is a buy with a stop at 164.5 for targets of 175.
Okay, Mitesh, any trade left on Hindalco or Vedanta or Nalco?
I do like Nalco, and I do like, in fact, I do like all of them. The only thing is that the risk-reward equation may not be the most favorable. I think Hindalco earlier peaked out at levels of 277, 278, and that was in October. So we are very back to the earlier highs. So maybe, it's after seeing the stock rally from 240 to 280 in the last 7 days, I think some profit booking might happen. So on declines, I would be buyer.
All right. We'll leave it at that, gentlemen. Thank you very much for joining us, and we'll touch base with all of you on the hour. The markets at this moment, a shade of green on the Sensex and the Nifty. With that, let's move to another of the stocks that have performed extremely well in the past couple of years, AU Financiers. We are calling them also because the 10-year yields have spiked past 7.3, and that always makes life a little difficult for those who are dependent on wholesale finance. Sanjay Agarwal, Managing Director and CEO of AU Small Finance Bank, joins us. Good morning, Sanjay. Thank you very much for joining us. At the moment, how dependent are you on wholesale funds at all? What part comes from wholesale? What part from your depositors?
So, Lata, it's not only wholesale, right? We become bank in April. So our retail franchise around deposit is doing fairly well. And we already raised around 4,000 crores from this CASA and the retail TD, and of course the wholesale TD. So in our case, it's just around 60% which is funded by wholesale, and that too, we have a priority sector book, so we are easily able to sell that through securitization or whatever way. So yes, of course, if the GSEC go around 7.3, 7.4, it makes our life a little bit tough, but we can manage it in overall environment.
So no impact on margins, you think? What may the margins be in the next 12 months compared to what they were in the last 12 months?
So I think in a 12-month comparison from last year is not that too good for us because we become bank this year.
Okay.
But overall our cost of fund has gone down by 200 basis points.
Okay.
Right? We were around 9% last year. This year we're around 7%. So overall, I don't think it will have any bearing for us in next 3 to 4 months.
Sure.
Post April we have to figure out how our mix would be.
Okay. Mr. Agarwal, good morning. You're actually best placed to tell us about the demand situation in some of these tier 2, tier 3 cities because, you guys have exposure to the small and medium enterprises in Western India, to agri loans, small commercial vehicle loans, etc. Can you tell us how is demand shaping up?
So, so demand is not universal, right? So there are some sector which is showing good demand, which is the MSN, SME, and some sector like real estate and the related thing, is not showing any kind of demand. So, you have to place yourself, and the demand is there, right? But the competition is also intense.
Oh.
So the challenge is not demand, in my opinion. The challenge is the competition. So we have to figure out what market, what sector, how we have to place ourselves and then build on.
Okay.
So but post GST, we already 4-month-old, 5-month-old around those new regime. I think the demand is picking up, and this 4-5 months should show us some more intense working around it.
We saw a quantum jump in your GNPAs after you became a bank. It's gone, the first half is, I think, averaging 3.1%. How is that shaping up? Will that go up more? Will it decline? If yes, by how much in the second half?
Because we become bank, right? So the spike was due to 2 factors. One, we actually started classifying from 120 to 90 days. And on a bank platform, one stack NPA always remain NPA, right?
Okay.
So I think these are 2 major reasons for our spike. Otherwise, our NPAs are always in that zone which we want to be in. But as we move forward, after this GST implementation and whatever, and always this second half of the year is better for your asset quality. So we hope that our gross NPA should be lesser than 3% as we move forward. Okay.
So what about AUM growth? There are some brokerages that forecast even a 40% AUM growth for your bank over the next 3 years. Is that a doable target or is it a tall ask?
So I won't say it's a tall ask, honestly, because our base is so small, and this year also we are growing ourselves by 30%, and that you have to appreciate that there's a demonetization, there's a GST, there's a RERA, a lot of things happen around us, and how the election happening in next 1.5 years. So, but I hope that in the range of 30 to 40, which we are saying continuously from last 2 years, we should be able to manage it.
Okay. Sanjay, one always was given to understand that MSMEs and SMEs are not given enough credit, not given enough attention. You're saying there's competition. Who competes with you?
No. So what happened now, if you really see the whole space around NBFC, the small finance bank, the larger private sector banks, are looking for growth, right? Okay. And a lot of capital is chasing them. You see how many HFC has come in last 18 months. So it's not about the only SME space I'm talking about. It's just about the credit growth I'm talking about, right? So I think there is a lot of demand, honestly, but I think the challenge is not demand, challenge is the competition, how you manage your top IRR, how you manage your cost of fund, OPEX, whatever, right? So it's about how you manage your business. Okay.
Fair enough. We'll leave it at that, Sanjay Agarwal. It was a pleasure speaking with you. Thank you very much for joining us and have a great 2018 yourself.
And I wish you all a very happy new year and the entire team of CNBC.
Thank you. Thank you very much. So that's very positive vibes coming in. Their cost of finance has fallen, and we all know that after they become a bank by 200 basis points. As well, Sanjay, confident that the spike in GNPA because they became a 90-day counting NPA counting company is a one-off, and they should be below 3%. So that's the word coming in from AU Small Finance. We have to take a break.
Yes, as we do that, let's leave you with the 4th set of the big New Year bets from the CNBC-TV18 Market Wallas. In fact, some of the stocks are really spiking up now. So let's listen in to SP Tulsi and Prakash Diwan, Ambrish Baliga and Meherboon Irani with their picks.
The company has 165 kilometer Yapuna Expressway with a residual concession period of 30 years. Generally, in all road projects, you have a total concession period of 20 years. Here it was 36 years, of which they have completed 6 years. So they have a residual concession period of 30 years. Apart from that, they have 27 crore square feet of land under development at 5 locations. So given a target of 24 in the year 2018, but one can even keep a time horizon on the stock till 2018 to see maybe higher gains apart more than 24 also.
This company is the third largest player in antioxidants and food flavors. Okay, I mean which is something that is very unique in terms of chemistry, and it's not easy to replicate. I was looking at a theme which is linked to the US growth story and was into chemicals and had no competition, and this kind of qualified. My sense is it could see a growth of about 30% on revenues, and the EBITDA could probably double in these next 18 months. So that's where the story lies. Even if you discount FY20 earnings, which is 15 months away, probably with even 21, 22, you get a target price of 199, 200, which is a decent upside from where it is.
Now with their revised strategy, I expect that things should fall in place. They're increasing their institutional sales, increasing their EBO footprint, getting into more of sub-brands, ladies and kids wear. Looking at an EPS of about 36 rupees for FY19 and about 49 rupees for FY20, it looks very cheap compared to other branded players. So I think this is because of the history, but I think it should catch up. So I think at these levels it looks decently cheap. Possibly you could see, have a downside of about 5 to 7%, which is there with any stock. But looking at a price of about 740 over the next 9 to 12 months.
Consistently positive on the stock, and the reason is that one can defend the valuations because the growth is going to keep on coming. I think as a global leader, number one, in telecommunication equipment, which includes optic fiber cables, data cables. The company has operations mainly in India, China, and Brazil, but has marketing network nearly across the world. So I think Sterlite is on a good wicket. Again, the stock cannot correct by 10%. Who can stop it? You and I cannot stop it. But 250, 260, 290, 300. But I believe the stock has the potential to be a 450 to 500 rupee stock over the next 12 months.
Okay, before we take a break, the Bank Nifty has moved to low point of the day. I just want to bring Ashwini back on this. Ashwini, 37 points down now on the Bank Nifty. In fact, there's a bit of a slide taking place, and it's been led by PSU banks, PNB in particular. That normally is the chosen one at times. Is that changing your trade, Ashwini, or is this just a minor sort of?
See, the market's verdict is clear. All NBFCs, banks, private as well as PSU are coming off. We are going to take out yesterday's low. So there is clear follow-through selling. So I would think taking short positions even here would not hurt, because once yesterday's low goes, I think a lot of stops and a lot of people are going to come into sell financials. So, obviously the good news hasn't worked, and that is what will give you momentum on the downside.
Okay, so what kind of stocks would you be shorting, Ashwini?